I work specifically with private practice owners, specifically mental health practitioners. I've been doing this for several years, and throughout the years, I've just identified what tax strategies work best for them. So there are a couple of tax strategies, and I wanted to go over them, give you a quick summary. I don't expect you to know the nitty-gritty and to know the technical aspects of it, because that's what you hire an accountant for, but I do want you to at least have some type of knowledge so you could ask questions. I just dropped off my daughter at summer camp, and I am sitting in my car because this is probably the best time for me to record a video. If you hear things like that fire truck that just passed by, I apologize in advance. My name is Jeanette Andrada. I am an enrolled agent licensed through the IRS. I help therapists in private practice pay the least amount of taxes using tax and accounting strategies. Let's go through a couple of tax strategies. The first one is a tax strategy people don't really see as a tax strategy, sadly, and that's going to be your bookkeeping. Your bookkeeping is so important. This is the foundation. This is where you decide what you're going to write off, what you're not going to write off. If you are not doing your bookkeeping, I promise you that you are paying more in taxes than you should. Having a really great bookkeeping system set up is going to not only help you save on taxes, it's also going to give you peace of mind, and it's going to help you stay organized. In case of an audit, you have all your information and you are able to answer all questions. And top of this, forgetting about the tax side, this gives you some managerial perspective on how your private practice is doing. You could find areas where you could cut costs, and there's just so many benefits in bookkeeping. And honestly, it really does make me sad that a lot of business owners just neglect this part of their business, because it is just so essential and so important and so impactful. That's going to be tax strategy number one. Another one that a lot of people don't consider a tax strategy, but honestly I do, it's to pay your quarterly estimated taxes. The reason I consider this a tax strategy is because the IRS is charging you 7% in penalties for not paying your quarterly estimated taxes. That, guys, you're just throwing money at the IRS. That's going to be one area that you are going to save on taxes. Easy place to start saving on taxes. And it's not really taxes, but they bill you when you file your tax return. These two are the bare minimum. If you're not doing the bare minimum, I promise you everything else is just not going to be in place correctly. Everything else is going to be wobbly. So having your bookkeeping quarterly estimated, you are in a really great spot. Next, we're going to go into more advanced and complex tax strategies. The first one is going to be to hire your kids or shifting your income to lower tax brackets. This is a really cool tax strategy. I talk about it in a different video. Make sure to check that out. When it comes to paying your kids, you can pay them up to a certain amount without paying any taxes. They don't pay any taxes, and then you get the business write-off. So you get like this double benefit. At the same time, it's not just, hiring them to save money on taxes. This is a great opportunity to give them responsibility, to give them experience, so when they do go out in the real world, they know how to do basic administrative tasks or basic tasks with running a business. Maybe they want to start their own business when they're older. They'll have some experience in that. Next is a really common one, and for a good reason. You do save a lot in taxes, and that's making an S-Corp election. An S-Corp election is a tax structure. Most states, your LLC is going to be considered a sole proprietorship. At that point, you're being taxed as an individual. Even though it's a sole proprietorship, you're in a business, the IRS sees it as income. Like, they just see it as an income. You end up paying self-employment taxes, which is your Social Security and Medicare. That's 15.3%. That adds up. Right? When you're employed as a W-2, your employer pays half of it. You pay the other half, but it's all withheld on your paycheck, so it doesn't hurt that bad. When you are self-employed, you don't have an employer, you are the employer, and you need to make your quarterly estimated taxes to pay that throughout the year. This is why you get penalized, because you're not paying it throughout the year, and your Social Security and Medicare is just kind of hanging out, and you end up paying it, but it's 15.3%, and that's what makes up the majority of the tax bill. When it comes to S corporations, you become an employee, which means that you get paid via W-2, just as if you were to work anywhere else. You get a W-2, and then your business as an employer is going to withhold from your paycheck and pay your payroll taxes throughout the year, so it doesn't hurt as bad. Where the savings come from is that W-2 paycheck, because you're paying taxes up to the W-2 amount. If you're getting paid $50,000, you only pay Social Security and Medicare up to $50,000. When you're a sole proprietor, you paid up to your profits. So if we take your income minus your expenses on your business, let's say you profited $80,000, you're going to pay Social Security and Medicare on the full $80,000 instead of the $50,000 on your W-2. The more profitable you are, the more the tax savings, because you're not going to need to pay Social Security and Medicare tax on anything except your W-2 amount, which is $50,000. That's where the tax savings come from, and it's huge. Like, you end up saving a lot of money. Let's talk about the next tax strategy, which is retirement planning. With retirement planning, careful retirement planning, you have a lot of opportunity to save money on your taxes. With retirement planning, we have lower limits for individuals unless you work for an employer with like a 401k. In this case, you are able to open up retirement accounts where you have much higher contribution limits. So now your business is contributing and you're contributing, and your business is getting a write-off. This depends on the type of retirement plan, and there are several. So I won't get into it in this video because we're already talking about a lot of things, but just know that retirement planning is definitely an option to help you save money on taxes. Well, there you have it. These are the tax strategies that I use for a lot of my clients. It's not for everybody. This is something that you should consult with the tax professional before just deciding to, take the plunge. But I know for my clients, because I work with the same type of clients, I have identified these are the ones that work for a lot of them. I will tell you, the clients that have all of this set up are the clients that are in really great shape, and they are paying the least amount of taxes, and they're not stressed out about their accounting and their taxes and bookkeeping at all throughout the year, because it's all taken care of. If you're interested in learning more about our services and how I can help you, then go to the description down below. There's a link to my strategy sessions. It's a free 15-minute call where I go over your tax situation and I give you my recommendations on where you are with all of these tax strategies or other tax strategies that I have hidden under my sleeves, and I will give you those recommendations and what we can do to implement them. Thank you so much for watching. If you made it all the way to this point in the video, I really appreciate you, and I will see you next time.